In today's session of Visual JForex, we'll be starting afresh with a new indicator named Triple Exponential Moving Average, which can be shortened to TRIX. We will see how we can take the advantage of this indicator, which is going to help us in finding the trend as well as the strength of the trend, and we will see how we can use this indicator to execute the trade in a profitable manner. So now let us go to the Visual JForex board, which has been developed by the Dukascopy Bank SA. You will find this indicator amongst the oscillator just below standard deviation. In last session, we had used the standard deviation. Now today it's the turn of TRIX. We have to define these four parameters depending on which we will be getting the output value, and using that output value we can check whether this is the right time, whether this is opportune time to get involved for a new trade. And I will give you a brief explanation of what the logic is going to be for any trade to be executed. This is the USD JPY hourly chart, which I will change to Euro USD. This is the Euro USD chart of the hourly time period, and I have plotted the indicator TRIX with a default candle period of 30. So last 30 candles have been taken into consideration while calculating this indicator, and as the price momentum has been bearish for quite a while, we have this smooth line plotted with a downward inclination. And when the price was rising, the inclination was on the upper side, on the higher side, and as the price started to go into sideways movement with a bearish bias, we have this bearishness also evident in the plotting of the TRIX. So as you can see from the line, we get a very smooth plotting for the TRIX, and even if there is some volatility in the price, that doesn't really get reflected immediately. And instead of that, what is the larger trend, we can take that into consideration and trade accordingly. So here I will take you back in time, and you can observe on the chart, whenever the price momentum is bullish, we get this smooth line with upward inclination. The price tends to rise, the output tends to rise, and when the price momentum goes sideways, the indicator output starts to go sideways, and depending on the bias for the underlying instrument, we will get this plotting. And the main advantage of this indicator is the smoothing. In most other moving averages, we have the oscillation, and we have volatility and zigzag movement, but that is not there in these TRIX indicators plotting, and that's the advantage of it. And in classical interpretation, the output value above zero is indicative of the bullishness for the underlying instrument, and when the output value is below zero, that is considered bearish. And we can even use this setup in a way where we can consider this line crossing above zero as a moment where the trade can be initiated for buying. And when we have this TRIX indicator crossing below zero, that can be the opportune time to go short. But in today's algorithm, we are not relying on that logic. We are going to use the overbought and oversold scenario. So we will be taking the TRIX plotting over last 10 hours. We will be comparing the last hour's TRIX value to the value 5 hours back, and that value again to 10 hours back. So we will have three TRIX values with a time interval of 5 hours each, and we will see how it has evolved. And the logic is going to be simple. We want the TRIX value to start reverse after having spent considerable time in the oversold scenario, and that will be the appropriate time to get involved for a buy trade. And we will need the last hour TRIX output to be higher than the TRIX output 5 hours back, and that output should be lower than the TRIX output 10 hours back. So we will compare these three values and accordingly decide the trading decision. And when we have to short, we will reverse this requirement. Now we will need all three output values of the TRIX to be above 0, and last hour's TRIX output should be below the TRIX output 5 hours back, and that output should have been higher than the output of the TRIX 10 hours back. So here also the time interval is going to be similar, and this is still in negative. I think we will have to look for movement somewhere here. We have seen considerable upward momentum, and after that the price action has gone sideways, and this is the time to go short, and that's what we will be doing using this indicator. And we will also be taking the help of the price action. So we will take the cluster of 5 hourly candles. We will consider its low price, its high price, its closing price, and we will place the condition that there should be good enough volatility, there should be enough of movement, and we should not be getting involved if the price action is simply sideways. So to make sure that we have enough of volatility in the underlying instrument, we will take these get historical candles with a 5 candle amount, and check its high and low, and also its closing and opening values, and then decide to trade accordingly. So we get started with this Visual JForex board. First thing we will have to do is get the logical blocks. First three are going to be if blocks, and we will have to get the instrument subscription done. On candle is going to be our start point. Okay. We want default instrument to be matched with candle instrument, and candle instrument should match the instrument of choice, which is going to be Euro USD. We will have to find the Euro USD amongst these names, and it is proving a bit difficult this time around. Okay, I got it. Position amount, all position amount needs to be at 0, and after that we will add this. Hourly candle period and shift value is going to be 1. I will add 2 more of these blocks tricks. It is under the oscillator, not the moving average, as it is the triple exponential moving average. I got confused. Shift 5 and shift 10. And to check out the price volatility, we will take the help of get historical candle. So we need component, info component, and it is going to be this. Candle amount 5, candle period will need to be changed to hourly. Shift is going to be 1. And with this, we are also going to need a logical component loop viewer to retrieve the individual variables from this array of data. And after this, to look at the price formation just prior to the execution, we will also be taking the help of 3 more get historical candles. First one of hourly time period and 2 more of 10 seconds each. So again we need the info components, 3 of these get historical candle. Hourly, and these 2 of 10 seconds each. Shift is going to be 1, and this one also 1, and here it will be 2. Now we need enough of volatility prior to the execution of the order, so we will take this price volatility in consideration, and we will need the difference between the high and the lowest point over the last 5 hours to be at least more than 20 pips apart. And for that we have to define 20 pips. For that we have to take calculation expression, and it's fairly simple. All we have to do is get the default instrument pip size and multiply it with a variable with the value of 20. It is going to be A1 into A2, and it will be giving us a variable without value of 20 pips. Okay, so later on we will be considering the HLVs high and low, and what we will do, we will also be considering the difference between the last tick price and the low price when we are looking for a buy trade, and when we are looking for a sell trade we will consider the difference between the last tick price and the candle high, the HLV is high, and in both these instances we will take the difference and take the half of it, and we will subtract it or add it depending on the requirement. When placing a buy order we will be placing a limit order, so we will need to deduct the price, deduct the difference, and while placing the sale order we will be placing a limit order, so that means we will have to add, and it will be placed on the higher side of the current value. So I will be explaining all these things in very detail in next session, so do come back. This is all for today's session. We have got these blocks in place which are needed while defining our conditions for the execution of the trade. So we stop for the day here. You can check out the Dukascopy Analytics page for coverage of the market developments. You can start trading on the JForex platform, and also Visual JForex platform is going to help you in designing, developing the algorithms like this one. And you can also join us on the social media. We are available on the Facebook. Do join us there. Thank you all for joining in. See you next time. Till then, goodbye.